Offshore oil production in the U.S. was shut down due to a hurricane raging through the Gulf of Mexico. Meanwhile, official industry reports showed a decline in the U.S. oil inventories, thus sending crude prices higher. Amid the rise in oil prices, the ruble has slightly advanced against the U.S. dollar and the euro. Early in the day, Brent oil futures went up by 1.43% to trade at $41.11 per barrel, while WTI futures added 1.75% and settled at $38.95 per barrel. Around a quarter of U.S. oil and gas production was shut down on Tuesday as Hurricane Sally approached the Gulf of Mexico. The data from the American Petroleum Institute showed on Tuesday that oil inventories in the U.S. fell sharply last week. It is reported that crude stockpiles dropped by 9.5 million barrels to 494.6 million barrels for the week ended on September 11. Analysts had expected oil stocks to increase by 1.3 million barrels. On Tuesday, the International Energy Agency downgraded its forecast for oil demand this year because of a cautious outlook for economic recovery from the pandemic. At the same time, the OPEC said it expected global oil demand to fall more sharply than previously forecasted. Analysts believe that oil-producing countries are at great risk. According to Martin Frankel, the president of S&P Global Platts, global oil demand is set to contract by 8 million barrels per day by the end of the 2020. And this is a massive reduction compared to previous years. It is projected that fuel demand will not be able to recover to its pre-crisis levels even in the year 2021. On Wednesday, the Russian ruble is appreciating against the US dollar and the euro amid positive dynamics in the oil market. In the morning session, the ruble was up by 7 kopecks against the dollar and reached the level of 74.92. Against the euro, it rose by 8 kopecks to 88.77. In the meantime, Brent gained 1.9% and was last seen trading at $41.03 per barrel. A rapid drop in global fuel demand was definitely caused by the lockdowns imposed in different countries to curb the spread of the virus. At the same time, the amount of oil held in storage is gradually increasing. On September 15, the International Energy Agency released its monthly report showing a slowdown in global oil demand recovery despite the easing of the lockdown measures in some countries. At present, the recovery has stalled due to the second wave of COVID-19. This makes the outlook for the commodities market more fragile. Traders will be also anticipating the summit of the OPEC Ministerial Monitoring Committee, which is scheduled for Thursday, September 17. That's all for now. Thank you for watching and see you back soon. Bye.